Uh, I think if you look at it in last 2 days, we spoke about payments, we spoke about inclusion, we spoke about lending, secured lending, all of that. There was hardly any discussion on deposits, right? I think it's assumed to be there and it's like default option. But we know that this is where the interaction or the engagement with the customers happen, and the banks have that advantage that they have access to low-cost deposits. That's the advantage. But nobody talks about it because maybe it's not that attractive for people to talk about. But obviously, we know that some time back, there was a lot of flavor around neobanks and how neobanks will change and all of that. We also seen evolution of how maybe from a Kotak 811 to Digi, then we've seen AU 00111 getting built. So I think there's so much of action which has happened. And I also be honest that most actions have also happened on small finance banks. They have been doing a lot of good work which is not coming out. So I thought it'll be good for us to have this interesting panel where we talk about deposits with the guys who are really innovating. And I know that as we work with many of them, they are the ones who are thinking new stuff. And of course, from a neo-banking perspective, I think Freo is leading the charge in many, many ways. Can I request? Yeah, sorry. So if you look at Freo's story is great. They have a lot of brands and a lot of activities that are happening there. From a Money Tap, I remember Money Tap days where we were interacting, and from there to Freo, so many brands and so much of value getting created. So we'll learn from all three of them in multiple ways. But let's start with Sandeep. And it's a very open question saying, how do you visualize deposits getting innovated by banks like yours? And at a broad level, what is your strategy to scale up and maybe give more optionality to the customer, maybe in different target segments? Very open question. It's because you are building so well. So I just want to hear more stories from you.
Thanks, Abhi. So what's happening if you look at deposits today, if you approach the customer asking, do you need deposits in banking terms, it starts with things like a fixed deposit and retail deposits. It's so boring, right?
I agree.
It's so boring. Boring both for more so for the customers. So customers are looking at various different aspects. Today, when you have investments coming in form of SIP, etc., and Indian stock markets doing well, we bankers are left with no choice but to innovate, and innovate in a fashion in which the customer would feel more engaged and would want to buy that property. Of course, we were talking, I and Kunal were talking a while back about what's happening, what are the various things we've tried. So one way of looking at deposits is from the customer's eyes. How do you differentiate a 7%, 8%, 9% deposit vis-a-vis a mutual fund SIP which can give returns as high as, say, on a CAGR of around 15, 20%. However, of course, what brings into the banking system deposits is the guarantee part. The second thing I would say where a lot of ice is being broken nowadays with the customers is how can we make the deposits more goal-based? And of course, some of the fintechs have done amazing job over there. And of course, at banks also what we're looking at. So we started looking at a concept. First, we started by doing what if you want to plan for a holiday 2 years later? What kind of corpus you should create? In a place where it's BNPL, buy now, pay later, deposits is trying to create a place where you're saying save now, buy later. So that thought to plant in customers' minds meant a little bit of research with customers. So what's working well at this moment is how do we really link the dream or the goal of the customer and the duration and bringing it to bite size and telling customer that you need to, for 1 crore kind of a saving in 15 years, you don't need to save much, you need to save 100 rupees a day kind of a thing. So we're making it bite size for the customer, trying to link it to all the kind of goals and the dreams which the customer can do, and bringing it on a platform where the customer can play the goals, play the mix of goals, look at redemption ways. So these are the few things we've tried to do with the customer. Another interesting thing which we try to do, and of course that's come out with customer research, is when we started planting the idea of goal-based deposits and savings, another thing which came out from the customer, when the customer says, I can buy something on a loan today, why should I save now? So then we started looking at a combination. If the customer's goal is something around which is beyond his deposit or beyond his or her loan eligibility. That's where that new idea we experimented and it's doing well, is where we try to make deposit as a mix of deposit and loans. So that's where we started seeing the next level of spike from the customer side, but clearly seeing it's one place which is, I would say in Bollywood parlance, non-glamorous. However, we're trying to make it interesting to the customer by the digital play, by giving a platform where the customer can visualize what kind of dream it's going to look like. And last but not the least, what we're trying to do, let's say you plan for your next anniversary to gift your wife, say jewelry worth 10 lakh rupees, etc. While you can buy it on loan today. Or
those are your ideas. You can give 10 lakhs. Please don't give ideas.
So that's where we started to think, what can I do along with your goal? Can I package some offers for you by the tie-ups which the bank does, where I would make it very easy for the customer to reach the goal through offers also. So we tried making a combination of loans, deposits, and bringing in relevant offers. If you're a non-smoker, giving you an offer of something related to tobacco products doesn't make sense. So we try to curate something which is very relevant for the customers, and that's where I see deposits now sort of again coming back into picture. Of course, the rate of interest and the guarantee part of it is very interesting. So that's where I think we are here, and of course, we'll hear what else is being done. But I see a lot of experimentation, a lot of hard work, but yes, customer centricity at the end of the day, which is paying off.
Fantastic. Fantastic. So, I think, Sanjay, I don't know how many of you know that from a partnership perspective, they are doing really well. So, when we were working with Money Control and we were onboarding, we realized that their offer was really good. So, I don't know if anybody has tried. You can actually find their product, FD product everywhere. And I myself realized the other day that I have invested fairly high on that. So I think journey has been good. So maybe quickly you would want to give us a view on how you're innovating and how some of these partnerships are playing out and how every kind of product, which is a debt product, is coming alive in various ways.
Okay, so I think I have a slightly different point of view from what Sandeep was talking about. I think as long as you have a clear idea about what you want to save, and what is the kind of surplus you have available for investing, and you can allocate a certain portion of it on fixed income. And I think in terms of fixed income, now with the new budget which came in last year, there is no differential between a mutual fund or a fixed deposit. There's no tax advantage, I mean to say.
Maybe closer, I think.
Yeah, so there's no tax advantage between a mutual fund and a fixed deposit. So, and with the interest rates which are pretty high as of today, the attractiveness on the boring product, which is called fixed deposit, has become very attractive. So people are ensuring that they have a certain amount of money, which is a pot of money, which is always available to them on tap. While it takes T+2 days to get money from the mutual fund, this is, on call. You can call the phone banking, you can log into your mobile app, you can draw the money as and when you want. And you can get an overdraft against it at a fairly decent spread. I think all that makes it very attractive. No matter what you say, even today 46 lakh crore is in fixed deposits in India versus 4.5 lakh or 5 lakh crores in mutual funds. So there is a huge differential there, which proves that Indians are as such very risk averse. Still taking a long time. Although I see every month the SIP numbers going up, but still FD numbers still outweigh the fixed deposit. So I think fixed deposit has to stay. What we have done a little different is, one, of course, we have revamped our branches. So, we get a certain X percentage of our deposits from the branches, which is at a rate which is predefined. Also, we built up a very amazing partnership with one of the fintechs. I don't want to name them, but it's public information. Anybody can check. With which it's like an aggregator. So they have multiple other companies which are participating on this site, and they help us to get customers. So today if you log on to Money Control app, you will get a small pop-up will say if you want to invest in fixed income deposits at very attractive rates, which if you're a senior citizen is about 9.1% today. When you click on it, you will get Utkarsh Bank as the first option. From there, you can start your journey, input your PAN or Aadhaar number, and then it takes you to a video KYC, and you can book your deposit there and then. And it's as simple as that. Okay, it's like as good as opening a savings account using Aadhaar OTP. So that's the kind of innovation we have done. Every day we are seeing an increase in number of accounts and number of the volume of deposits. So I think, and we are going to expand that even further. It has got us two big advantages. One, we get a recurring kind of inflow every day. Secondly, it gets us into geographies which we are not presently there. So I think in both the ways, helping us to build up our distribution and add value to our portfolio. So that's what we have done.
Fantastic.
And we are also going to be launching one of our latest things, which is a neobank kind of version. That's the next thing which is coming up.
That's great. That's great. Kunal, I think there was certainly a hype on neobanking at one point in time. Somebody told me that every nook and corner in Koramangala, there is a neobank there, neobank for this and neobank for that. And you have been in this business, you have been doing it very, very carefully and have scaled well as well. You must be amongst the largest players in the market. So what kind of innovations are there which neobanks can do, and maybe what the roles they are going to play in the ecosystem as scales forward? So maybe a quick story on Freo itself will be great for us to understand.
Sure. No, thanks, Amit. I think like Sandeep and Sanjay also mentioned earlier, I think a deep understanding of what the customer wants is obviously at the root of deciding what a neobank should or should not get into. Very early on in our journey as a business, we learned that who our customers are and where their needs are coming from. I mean, there was a time when 90% of the deposits or the savings of a household sitting with public sector banks. Today, that's probably like 60% or so. Obviously, it has moved out of public sector to private sector and new age players. We learned along the way that at the heart of it, the desires and aspirations of a consumer, our middle income, middle class family consumers, they are rooted in a few things, right? One is it's very deeply rooted in safety. So you want to be safe, and you first want to save, and then that becomes the bedrock of long-term wealth creation. And I think that psyche has not changed in a family. The other thing has been that massive need for income generation and aspirations. And I think credit has continued to be the enabler for that. So credit is an income generating product in some ways for businesses and even otherwise, right? So if you look at all of these needs together, I think neobanks have approached business models differently. Some have focused on only savings, saying, look, the experience is what matters. Some have focused only on payments, saying payments is what matters because that drives engagement. I mean, our journey started by creating credit solutions first. And it was probably our first order negative decision because you're taking the bull by the horns when you go after credit first, because it's probably one of the toughest problems from a monetization, quality, tail end risk, and so on. But we got that right very early on, and we learned that it's a pretty serious long-term game to play. And then we realized that in addition to solving the credit problem, we could actually solve more problems for our customers, because when we understood credit well, we really understood our customers well. I think that's where we built our solutions on top of it. Today, Freo does pay, save, and borrow. We have co-branded credit cards. We have our pay later solutions. Our UPI, credit on UPI is going live pretty soon. We should be amongst the first, one of the early ones in the country to launch it at scale. We already have our digital savings product, and we've been probably one of the first to start a consumer credit line in the country on the retail side, and we're scaling that piece up. I think the role that a lot of neobanks play and digital banking platforms play are going to be twofold. One is it's going to be of deep collaboration with banks. Like, Sanjay and I were chatting earlier, Sandeep were chatting. But a deep collaboration with banks to bring strengths together is probably one very strong and smart way to scale up for neobanks. One, obviously on the deposit side, the license piece is not there. So that's a pretty obvious one. But for players like us who are very well licensed, regulatorily kosher on all other aspects, all other verticals, we have multiple regulatory licenses. It makes it very obvious that there is enough opportunity in terms of the spread available. Asset side, obviously, it's a no-brainer. There's a lot of money to be made. But the big insight is that the pie is growing in India. So it is not a zero-sum game, which typically is the thought process when you talk about competition. So there was a narrative a few years ago that neobanks are going to compete, they're going to disrupt, fintechs will disrupt X bank will disrupt Y bank. And that's a very zero-sum game mindset. And I think every smart player in the industry, all of my panelists here, we all understand that it is not a zero-sum game. It's a positive-sum game, wherein you're actually beginning to increase the pie and there is enough money to be made. And we are like, 35% of the index in the country, financial services. So I think neobanks will flourish with deep collaboration, and I think a smart collaboration on the deposit side, which then allows you to look at your second product and your third product, and deposits becomes a strong stickiness element for a customer. That's a no-brainer for you to grow. But a deposits alone play, I think it's a very smart play for a bank, but a deposits alone play is not a very smart play for a neobank. I mean, that's the honest verdict.
Maybe I'll reverse the order and go ask the second question back to you. Paisa kaise banega isme, right? I think there's been a lot of talks. There is very limited money, but you are on the you're doing amongst the best in the market, and maybe you would want to talk about how revenue generation activities can be built and largely turn profitable at some point in time. So what's the thought on paisa kaise banega?
Yeah, I think...
paisa kaise ban raha hai, let me put it like that.
Ban raha hai, I think we are making money. Look, I mean, lending is probably one of the oldest professions in human civilization. It is the oldest profession, right? I think, but out of two, I think lending is one of the two oldest professions, right, in the human civilization. I think the fundamentals have not changed. Whether you look at fintechs or whether you look at banks, the underlying core economics are of financial services. So the spread is where the money is made and the raw material is capital. So it's easier for me to call out where you will lose money. A high cash burn, high customer acquisition cost, only experience-driven strategy is a loss leader. So you cannot stand alone build a business saying, I'll only focus on experience, I'll only focus on design, and I will figure out money later. I think those days are behind us, well behind us. There is enough spread on the assets play. So credit has enough spread to be made. There is enough spread if the card and payment products are intelligently thought, especially with what you saw in the ONDC and UPI coming, credit on UPI rails coming in. So I think for us, some of these verticals are already money making, very, very high margins already for us. Savings standalone, there is revenue, but net of the acquisition costs at scale, are the margins very high enough? Probably for a bank at the end of the day, where if you look at a holistic level, but for a more tech-driven play, I think the majority money comes in from the asset play. There is insurance for sure. There is wealth, but wealth is a very, very nascent stage, at least for us, where our customer segment is the middle-class Indian family, right in the center of the demography. But if we intelligently design multiple products for the same customer segment, and same is the key word over here. If you spend money on IPL ads and fancy TV ads and acquisition strategy and celebrity ads to acquire the sophisticated customers, but your product is designed for a very different customer segment, you'll have a major dissonance and eventually you'll lose money. You don't realize it because somebody's funding it. Like, let's say there is private equity money funding it, so you postpone the realization. But if you don't operate that way, if your products are designed, all your products for the same customer segment, A, B, and C, which is what we obsessed about, then you start turning every customer profitable in a matter of quarters, not a matter of years, which is what's happening for us now. So I think there is money, there is revenue to be made in multiple products. There is fat margins to be made in some of the products. But if your acquisition is homogeneous and your costs are low, effectively the same customer turns profitable at a consolidated level.
And how about the CAC then? CAC is very high typically of acquisition. So how do you manage? Because I'll reverse this out when we go to banks. Banks are also thinking about that, right? So
Yeah.
Quick question on CAC. Kitna
Yeah.
lagta hoga and how do you get CAC low, right?
Yeah. Look, I think as a country, we are still a heavily distribution-dominated play right now, right? As against Western markets, which are solving the spread problem. Like, where is really the alpha coming in? It's coming in from spread. As an economy, we are still solving the distribution problem. We are still at financial access. I think for this decade, it's all about distribution still, as much as we say it's something else. CAC obviously is a mixture of multiple channels, and you have to be multiple channels. And I think the one thing we all learn is that no matter how sophisticated the technology, and India is still not 100% DIY, do-it-yourself economy. So I think there has to be some interplay of traditional channels and digital channels. But a full-fledged brick-and-mortar channel or a full-fledged digital channel both have their own challenges. For us, more than 50%, close to 60% customer acquisition is organic. We have one of the lowest customer acquisition costs in the industry today. Very, very low. I have to make sure I take permission from my CFO before I say the numbers. So I'm not going to do that right now.
No, you are CEO, take it.
But yeah, we are probably one of the lowest CACs in the
We are
industry.
listening.
Yeah, so I
Give me
think
the no. Okay.
one of the lowest CACs, but digital for sure, but being very, very true to customer acquisition strategy, saying that, look, we will not spend on high-cost channels. And then you are forced to innovate on the low-cost channels and forced to build organic. And that's what's worked for us really well. Very, very low CAC, close to 50 to 60%, almost zero or organic acquisition, and then, very high LTV to CAC ratio.
Okay, so Sanjay, the question to you would be, we talk about stickiness, you spoke about maybe ability to sell more products somewhere in the journey. The same thing, right? Mao DAO, how do you ensure that people are active? And at the end, we're looking at how can you become the primary bank account of the customer, right? So what is the journey? Because technically it's good to be a second account here and there, but how do we become the primary account and how this cross-sell will happen?
Okay, I think the key to this is the number of transactions. How many transactions does the customer do with you in a month? Typically, a customer has at least 2 to 3 bill payments. Needs either pays rent or gets rent, or he has to pay his XYZ bills. So about 7-8 transactions are minimal. Anybody will do. I think all of us can vouch for that. So if you have about 8 to 10 transactions per customer, if he has a loan, then the loan EMI has to go through you. If that happens, along with bill pay and any other school fee he pays for his kids or anything else, I think the stickiness automatically comes. Along with that, if you have a demat account or a SIP they're running, ensures that the customer's money will always be with you. I think it's a question of how many products does a customer hold. I remember my first job with HDFC Bank in India, and he was talking about 1:2. Today it is 1:5 or 6. So I think that is what is the key to building up the key account. Secondly is your distribution channels, how easy it is for the customer to be able to withdraw money and deposit money or transfer money. With IMPS, NEFT and RTGS available 24/7 hours, how good is your omni-channel experience? I think that is critical now. Third and important thing is if you can bundle it with a demat account or a SIP or something which puts together or stitches together the entire proposition. And if you have a ATM, today it was one of the time I remember people used to choose an account because either they had a branch or an ATM near their house or office. Today that is not the main criteria. It is how easy you have with terms of payment. A lot of people still use Paytm, for paying all the bills, including me. I've worked for last 30 years. I worked for all banks, but I still use Paytm because it's such an amazing product in terms of paying your bills. So I've been trying to get that proposition made in a bank, but we are in it's a long journey to do that. But I think these are the 3 things which have done at a very persistent level on a daily basis at branch or through any channel builds up the, the first or the primary account for the customer. So he has to have he has to have one or two payments. He has to have one or two, SIPs or loan payment or, some bill payment. At least 7 to 8 transactions a month will ensure that his balances are 3 to 4x than your minimum, balance requirement. That is the basic learning. And there's a direct correlation. We have done that. People who do not have anything with the branch, they maintain or not maintain. People who have at least 1 or 2 transactions go up by 20%. People who have 5 or 7 go up by 3x, 4x. That has been my personal experience and hardcore empirical evidence. Thanks.
Thank you. Thank you. I think maybe very similar question from a CAC perspective, or maybe the other one, which is that we think of digital as an alternate channel, right? Then we take it off the radar, and the percentage revenue or percentage acquisition remains very low. I think on that sphere, how will they catch up? Because tech is not difficult, right? I mean, anybody come across can build it for you. A basic, decent journey may not be as optimized as what Freo would do, but at least 70-80% of it maybe in 4 months, 6 months, something like that, right? How do you go to the next level where you actually scale business, right? Because the selling is different. The customer is walking in not through branches. Therefore, how do you ensure that you touch the customer at every side? You need to communicate in multiple ways. How do you optimize? How do you ensure that those matrices of the entire funnel is that mature, right? Because most banks, honestly, are still learning on the digital marketing side, right? The whole funnel. So how do you think that journey will get played out, and how do you scale? And how do you bring the CAC down? Generally, banks put some money on the channels, do some advertisement and saying, okay, online, and then say, oh, it's too expensive. I'm spending 5,000 rupees per customer. But optimization takes time. There's tons of learning to be done. So I just want to get that grip. How will you get there?
So I think it's an interesting question because, as you stated rightly, the answer...
It's out of syllabus, right? It's not.
No, it's not. It's not out of syllabus. We breathe it day in, day out, so nothing is out of syllabus on that front, for that perspective. So clearly the way the word digital, I think it's the most overused word at this moment, but the way it's evolving, it's rightly evolving in a section where it's about easing the customer's life, making the understanding better, and taking the access right to the tier 4, 5, 6 cities as well. So if I look at, as a bank, at Suryoday Small Finance Bank, our philosophy is slightly different, where how do we learn and co-create? So what we've done at our end is we've created a middleware and a backend which is so robust that whether we develop that product or any partner develops that product as a front end for the customer, so our middleware and backend is so robust that it can take scale. The cost on which we build this, the cost of transactions, we are optimizing in such a way that anything on the front end doesn't load the cost onto the customer. So that very clearly across the diverse segment of customers. So let's look at a digitally native customer. Of course, that experience that customer is looking forward to is very different. Very different. Simple. Can I get something which I need in a few clicks? Of course, fintechs will have that advantage over any other banking institutions. So that's why we built the infra in which any fintech where we find similarities in thoughts, I would say similar kind of customer awareness or customer penetration levels, we tie up with them. That's one fact. Second part, we were a microfinance institution which got the small finance bank license. So tier 4, 5, 6 cities, if you were to talk about the inclusion base, that also is something which we serve, and when we are looking at that, that is 63% of India at this moment. And if we really serve that well, while the ticket sizes will be low, but that's where there's lots of, I would say, inclusion to be done, education to be done, and lots of money to be made. So that's where, if you were to balance that front, I'll take it back to the last point where we were discussing how do we increase the excess of deposits. So one way of doing that is, can I bundle it with an EMI which I'm taking? Let's say if some customer was paying me an EMI of 1,560. Just for example, let's say if I tell this customer to start making it 2,000 rupees of payment, and when we start putting the balance money as a recurring deposit for the customer and show that use case, the CAC is practically zero. So that's where we're saying, understanding the customer, how do we cater to the wide plethora of customer requirements, customer categories, is that's where as a bank we focus on ensuring that middleware and backend is so robust and it's so agile in terms of its load and cost, so that we can actually build any journey in the front, whether it's a fintech journey, whether it's our own microfinance play journey, or something from the bank side we are developing. So if we are actually at this moment, when we look at catering to the multiple segments, one, our reach becomes much deeper, much faster, it goes much faster. And second is, we are co-creating something. We don't want to be, say, thinking we are over smart that we as a bank will be able to do something, boil the ocean with our thoughts. That's what not you're thinking. So CAC is going to be a mixture of various things. Some places you will overinvest because you're creating awareness, you're creating maybe stickiness through loyalty. But at the same time, there is another segment where just bringing the access to those set of people actually makes you to acquire the customer at practically zero additional cost. So if you add this game together, I think that's where there's a lot of I would say deposits, assets to be given, as well as at the lowest possible CAC. But yes, it's an evolving journey. There's no simple answer to this equation.
Yeah, and loyalty and friction are similar by nature, right? So some banks may think that people are not moving. There's a friction, so they're not moving. It's not loyalty. So I couldn't close an account because I had to walk into the branch to close. So that account has remained. And when I went to closure, the guy said, "Yaar, mera nuksan ho jayega, mera KPI kharab ho jayega." So I left it there, and the account is still there. And interestingly, that account has a lot of money now because you had to diversify and figure out, okay, sometimes you have a flavor that is hone wala hai. But anyway, along the journey, maybe the markets have dramatically changed as well. I think hopefully at one point in time, and our belief is that the 3 to 5 years, 7 years journey, the difference between banks and fintechs will be negligible. And where the moat has been already created, the scaled guys will continue to pump numbers. And I believe that in that time, all the guys who are doing right now will be large unicorns. I would say not unicorns, they are more, let's put it, profitable organizations, scaling up the way today banks do it and many other entities. So many of them will turn into the next HDFC Bank, let us say. The small finance bank turning into that size. Or I used to work in Kotak. I was one of the first employees. So after maybe 7, 8 years, I went there. I looked at the tower. I said, where am I working? It was such a small one. We were together in those days, right? So I think we've seen scale. And that is the kind of stuff I'm expecting from the fintechs and, of course, small finance banks to pick up and scale. But I think we may have time for a couple of questions. If somebody can help with the mic, we'll take a couple of questions as well.
I think another thing, Samir, which is interesting is I think I see a lot of these banks buying out a lot of fintechs and merging them together to streamline their digital journey. I think that's the next level of convergence, which is I see happening very fast. Of course, the number of banks will shrink in India. Along with that, the number of fintechs which have reached a certain size will get absorbed very fast. That's the next big bang. Of course, today valuations are slightly out of whack, but that's the journey I see.
No, I think which direction we don't know. Fintech acquiring bank is also an option now these days. So let's keep it there.
There's one which has just happened, so let's see.
So all options are there in the market. But I think we can have a couple of questions, please.
Hi, thank you. That was a very engaging discussion. I just had one question. With the growing financial literacy among the Indian population about various investment asset classes, do you think the relevance of deposits will still remain? So there are other alternatives for deposits as well, right? In liquid instruments like bonds and all. So how do you think banks should ideally protect deposits as an asset class?
Anybody wants to take it?
Start. I think the answer is the simple point, we are India. And the kind of number of citizens that we have, people want to invest, varied needs, various levels of evolution or evolvement in terms of their financial understanding. So deposits, as a while back we heard that it's still the biggest market in terms of the saving pattern of India. So that way, while we see one segment of customers gravitating towards more fancy instruments, but yes, the core market towards deposits exists. And at the same time, making deposits lucrative for even the segment which is looking at liquid returns, etc. is also, for example, let's say if somebody is getting 7.5% on a say 30-day or a 60-day or a 90-day kind of a deposit, that's interesting enough. That outbeats the liquid investments any which ways. So there are options available in that. But it's once again, the way Kunal was stating, it's about coexisting. I think the market size is so big that all of these instruments will coexist and I would say explode in terms of the size.
Okay.
Just continuing on that.
Yeah. Nahin.
Just one small.
Nahin. Okay, just one more. Okay. थोड़ा सा pushy होना पड़ता है क्या करनी तो.
Yeah, thank you for that answer and this session. With CBDCs coming into the picture, what do you think would be the effect on deposits? Would customers be having a choice right now if they want to do a UPI payment or anything? They still have the money in bank deposits which are connected to the UPI app. But now with the CBDC coming, they can have money as a CBDC outside of any deposit and use it for payments, different types of payments. So how would that be affecting? What's your take?
Anybody wants to take it?
With UPI coming on credit cards, this is even going to be more disruptive than CDC coming in. That's just like you can have money in cash or you can have money in digital currency. So it's not going to make much of a difference. I think you can add in.
Look,
but UPI on credit card is going to be a disruption, which I think some of the fintechs will really start exploiting now.
Yeah, I mean, look, an apt comparison is what happens to one payment processing or channel versus another. I mean, the fundamentals of how we as a society think and operate as families doesn't change irrespective of what you introduce, right? There was a time when India didn't have cards, then we had some cards, now we have UPI, and probably tomorrow we have, let's say, CBDC. So I think the channels and the platforms are changing. It's making transactions faster. It's taking friction out of the system. But the fundamentals, the fact that we all have to get up in the morning and have to earn money and then find a safe place to first store that money, which takes care of the first order of problems that we have as a society, which is like a scarcity mindset of a society that we have. First, let me store the money that I have earned. And then I will think about getting rich, which is about investing the money safely. I think this psychology doesn't change, whether you have one channel versus the second channel. What it takes is friction out of the system, introduces more trust into the system, and it makes movement faster, which is like, that's the reason you see commerce growing so fast. So I don't think it's a question of deposits versus, let's say, CBDC, because deposits is a store and CBDC is more like a platform which is facilitating transactions of fiat currency. So I don't think it's that. One will probably facilitate the other. It's going to be easier. But you'll probably see product innovation where people will say, create a deposit, but now you can break up the deposits in bite size. Rather than saying, no, you cannot break up your fixed deposit, you lose all your interest. You will see product innovation happening on top because now you have a smarter channel feeding into it. I don't think one will eat into the other, it will facilitate it.
Okay. With this we close. Thank you. I think छोटा ही panel था, एक ही panel था deposits पे. I hope you guys would have got some flavor of it. Thank you guys.
Thank you, sir.
Thank you so much, panelists. Thank you, Mr. Samir Singh Jaini.